Let's talk about some of the most frequently asked questions around ETIs. In this video, we'll answer the basics. What is an ETI, how it is related to ETF, ETP, ETN, etc. How investors access it, who manages the strategy, and what risks and documentation should be understood before investing. ETI stands for Exchange Traded Instrument. In simple terms, ETI is a listed financial instrument with EC, designed to provide access to asset exposure investment strategy through regulated markets. To understand where ETIs fit, it helps to look broader exchange-traded universe. ETP stands for Exchange Traded Products. It's a broader category. It includes different types of listed products that trade on exchange and give exposure to an asset. Inside that universe, the best known is ETF, or Exchange Traded Fund. An ETF is usually fund-based product designed to provide diversified exposure to liquid markets such as bonds, equities, or indices. Then there are ETNs, or Exchange Traded Notes, which are debt-based instruments linked to the performance of underlying assets. There are also ETCs, or exchange-traded commodities, commonly used to provide exposure to commodities such as energy, metal, or commodity markets. An ETI is different because it's a listed instrument that can offer greater structural flexibility. It can be used to provide access to alternative, thematic, or non-traditional strategies that may not always naturally fit to a standard fund structure. So an ETI is not traditional investment fund. Its value is linked to predefined underlying strategy, asset, or exposure. This is why investors shouldn't only look at product category, but also specific terms, documentations, and risk profiles of each instrument. Investors don't buy ETIs directly through Altair's ETI. They access them through brokers, banks, or platforms connected to exchange where instruments are listed. Altair's ETI provides the issuance and listing framework. The underlying strategy is defined by third-party promoters or strategy managers. The value of an ETI is linked to NAV, the net asset value of the underlying strategy. Investment risk depends on the underlying strategy, market conditions, liquidity, and the specific terms of the instrument. That's why each ETI is supported by formal documentation such as base prospectus, final terms, or KID. These documents explains how the instrument works and what it tracks. This is the foundation of ETI: structure, access, and transparency.